Today I just made $10,000 trading SPY specifically, and well, 9,715 to be exact, I guess. And it was doing something very simplistic. So if we go to Think or Swim, I'll show you two specific kind of ways here to really understand this trade. A, this that you're looking at is SPY specifically, but the weekly chart. Now, anyone with eyes can see this thing's going up. I don't know how many times I've said this in the past entire year or so. This is literally the past year, every single week. Each candle represents 1 week. And it's just been going up. So logic would say if you bought more calls than puts, and calls being that you are betting that the market's going to go up, you would have made a bunch of money. Like there's nothing else realistically to it. So not to get into zones for this type of thing here, but as you can see, this was the week before. This is currently this week at this moment here during Christmas. Came down, hit this zone here, and since we're on an uptrend and it makes sense, my thesis was, well, if it's going up and it came down to hit this zone, it's going to just simply bounce back up. And if that's truly the case, and if we continue on with the high over here as an example of 325, a low, a higher high, a low, a little bit, very small but higher high, higher low, higher high, higher low, higher high, higher low. Looks like we now have a higher high and potentially right here specifically a higher low. Then maybe it would go up to here and I can potentially buy a call. It's not rocket science. It's realistically one of the simplest trades that you can do, honestly. And that's kind of that piece here. So, but I entered, it's more of a swing trade. Not going to get into swing trade stuff specifically here. But if you can see, I'll zoom in a little more for you. It basically came down, this huge rundown. Everyone's saying the market's crashing, it's going to fall down, it's going to kill everything. Guys, we're still in an uptrend. It doesn't matter about it. I don't care how huge of a move down something is because of X event. Um, Being that the interest rates are essentially going to happen fewer times in 2025 versus what was originally predicted. That's fine. It still retraced back almost like nothing happened. So who cares? So the buy was specifically after it bounced off of here and then it went over here. And then I bought kind of in this area specifically here, probably at 589, 588, excuse me, 588.65. And then I sold once it got up to this little spot here. I think I sold it about 600 on the dot. My take profit was in this yellow here, 602, because it's right next to the red here for the take profit. But the market closed and I don't want it to come up, hit it, and like maybe reject, etc. So get the money, run, call it a day. That's fine. But anyway, this is more of that's exactly that piece there. But even if you weren't swing trading, here's the nice thing if you're learning my day trading strategy as a whole. If we go zoom out this, if we're based off of this, we know everything's in an uptrend. We could just visually understand and grasp how to draw the zones, etc. Then if you just looked for calls on the daily basis and sold them on the daily basis, you could make the same money. So if we go to the chart tab, this is the past, because keep in mind, right? Let me zoom in. Green, 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 because it's bouncing off. So these past 3 days are green. So that means all these past 3 days here are green. So here was the bottom, kind of in this spot here, drove up. It was here, drove up. This was the last day, and it drove up, right? And it kind of hit this spot up here, but it rejected. Then closed over here at 601. But if you just look for calls, it would have made sense. So like this was a perfect example of what a call that a lot of students took that do one-on-one coaching. As example, like if I zoom in here, like if I didn't do my swing trade, I would have just did this call over here, which was this was a major supply zone. If you're familiar with my strategy, it came down, bounced above, tapped on top, and then since if I zoom out, we're on an uptrend, and this is that spot, it went up. Of course it was going to go up. We're on an uptrend. Of course it was going to go up. It bounced off the zone. Every thesis was potentially basically there, regardless of, hey, it dipped down. Like even with this thing, like people, I see a lot of comments on different spots saying that, especially from here over the 591.27 and it falling down here, like it's finally dropping, it's going like crazy, etc., etc. This is what, from 8:30 to 10? This is an out 2 hours, whatever, hour and a half of dropping, and then it went from same thing, all right, high, low, lower high, lower low, and then somewhat of a lower high, but then no lower low. It went to this. So it went from down to this being the down, this being the higher high, this being a higher low, right? It's going higher. This is a low and this is a higher low. And it broke it and it went up. And that was further proof that it was not going to hit this and bounce down. Hence, waiting for a new higher high made sense for it to come back, boom, tap, and then starts going upward. And then, if I'm being, this might be crazy to say, but let's just say you were like, you know what? I don't even know what trading is. I don't know what day trading is, but I can see that the chart's going up. I understand these zones potentially. Well, if realistically you just would have almost bought anywhere on, we'll zoom in on this chart over here, maximize sell, almost anywhere on Friday, so today, this Friday, excuse me, Tuesday, you would have made a good amount of money because it's on an uptrend. There's realistically nothing else I can technically say besides the fact that I do believe a lot of people do very much so overcomplicate trading. And just as a FY, at least for my weekly piece here, I'm also not saying that this is always going to stand to the uptrend, but it's going to always be in the uptrend until the chart says otherwise. And once the chart says otherwise, then maybe I'll look for puts. But until then, I'm not looking for puts, even from a day trading perspective, but also swing trading perspective. So an example of what potentially could happen for me to even look for puts on even a day trading perspective or swing trading perspective. This is, again, this week here, last week of 2024. If this thing, I'll give you the two examples, puts versus calls. Trend has to fully change. So this, I'll go ahead and put this up here. This is the new higher high. I'm not going to draw it yet, but this is the new higher high. But it's getting squeezed, right? Like this was actually because it was, zoom out. Okay, so this was high, right? Then low, and this one's a big gap between this and that. This was a bit smaller gap between this and that. So it's like, huh, that's interesting. It's almost like things are getting pretty tight. This is a decent gap here, but this is, again, somewhat decently small again. It's like, huh, okay. Same thing, this is small. Again, versus that, this versus that, this and that is very tight. Hence why the movement's like that. Then this high versus this high, it's getting tight again. So it could potentially reverse back down for a put. It could. But if it did, price action wise, it would look something like this. It would be this week potentially close out. Either this close out as a doji if you're familiar with dojis, but this maybe could close out. Whoops. Let's just say it goes further up, but like that. And the week closes as that. This would be lower than this, which would be potentially a problem. So January 1st is going to be a very, very, very important week, essentially, to really determine things. Because this volume's it's strong, but not really strong. You can tell down here. But if it did this, then that means potentially, okay, wait a second. If it does reject, then it could go down to something like this for the following week. So you're like, that's interesting. And then maybe the following week over here, right, going up. So if this was the high, so like this is the new higher high, this is the new higher high, but this is a lower high, then maybe this would be a lower high, right? And so it would go from, let me change this red so it would make a little more sense for you. So that'd be red, right? And then it came down, bounced off this, and it went to green. So then boom, we have a lower high, excuse me. And then that would potentially mean that the next month could do that. Something like that, right? And then the following month, something like this to go back into the zone. So this would be red. And then back into the zone. So it's a little green. Or it could just honestly just run down. You never know, right? It just depends on where exactly this thing closes. But then, the next week, excuse me, would be down to there, which would be the red guy. That's option one. This would be the only time that I would, even from a day trading perspective or swing trading perspective, I would say, you know what? I'm going to look for puts on a daily basis. Or, of course, like as mentioned, this could just simply just crash down on this day here. Then I have to wait the following week again for confirmation to know, hey, is this actually the week starting going to be lower here or not? If so, cool, we're in put territory because this is much lower than this, and this potentially is coming down to the below this lower low. So there's some issues here because keep in mind, weekly wise, trends really realistically stay the same, um, and they very much so look like a lot of those. So until something like this happens, or until this a huge break of trend as a whole happens, um, then we're perfectly fine. Like this one was okay with this big pullback, mainly because this gap was so large, right? It went down and broke below this, funny enough, but that full week it broke below it and came back, and so it counted as a lower, a higher low anyway, because this was here and this is there. But if this is the lower high, then if it just breaks below it in the specific area at 578.51, then we're in put territory. But again, if this thing just says, screw it, I don't care, it's just slow volume because it's the end of the year, which is 19, yeah. And this candle maybe closes here, or the next candle specifically gets formed, and the next candle maybe, I'll undo it, maybe this does that, and potentially there's no rejection down and it just does gold up, then we're still in call territory. So let the chart show and tell you specifically what exactly is going to be happening for that specific week. If you can chart out weekly what things look like.
If you're looking to become a consistently profitable day trader that makes $10,000 per month, then go ahead and visit mkuniversity.com/info to get started. We provide one-on-one coaching for 2 months, and that way we actually hold your hand and walk you to becoming successful with our specific day trading strategy, which is trading one strategy with one ticker and day trading once per day so you can be successful long term and actually take care of your family. And it doesn't matter where you are, by the way. If you're new to trading or you're an experienced trader already, but you're still just not consistently profitable as a whole, we'll teach you everything from A to Z from the ground up so you can be consistent, so you can be profitable, and more important, you can do the things you want to do, when you want to do them, how you want to do them, and not have to be trading so much. Because the goal when it comes to trading is to get your life back and to get your finances in order so you can do everything you want to do. And by the way, we already have 1,003 video testimonials from people that are already successful using this strategy that you've been learning in this video. So if you want to be the next person, you want to be number 1,004, then go ahead and click the link in the description where it says apply for coaching, and you can go ahead and get started. And now back to the video.
And then you go to your regular day trading perspective side of things and actually draw and actually take the trades based off of that, then you have a much better, much better understanding of things. And FY, you don't even need to be able to draw the zones. Like if we actually just pull this back, do this. If you just and you don't have to learn my swing trading strategy. I don't even have videos for that open to the public specifically. If you just take off all the zones, there's probably stuff on here. Do I have a clean one? X? Yeah, sure. If you take off all of the zones, you visually know where it's going. Again, do not overcomplicate it. Does this look like it's going up, or does it look like it's going down in the past 4 weeks? First, does it look like it's going up and down in the past year, right? This is the year chart weekly. And then 2, in the past 4 weeks, we'll say 6 weeks. 6 weeks, does it look like it's going up or does it look like it's going down, right? Usually you'd be able to look at it. So say 1, 2, 3, 4, 5, 6. Okay, hey, it's still going up. This started here, but it's over here, so it's still visually up, right? You could take just that simple approach alone, and you'll be able to get a much better understanding of where the heck things are. So that's my trade that I essentially took for about the 10K of profit. That's perfectly fine for me. At the end of the day, you really don't need a bunch of trades to make a decent amount of money. And yeah,